Alright guys, Genji Rusher here, and today we don't got the most productive video. I'm just giving you guys my 2 cents on the market and what I'm thinking of, and also what you guys might want to think of currently with the market. I got home early today, so I'm going to be pumping this video out. I'm making this video also because I want to talk on a red day, because I find it funny how when everything's green, there's a lot of yield max and videos on these high yield dividend funds. And ironically, when it's a red day, when last week is a red day, there's not many videos on these subjects. And I'm saying this because you guys need to be wary on who you are watching, because they might not have your best intention in mind. These people might just be farming videos just to make ad revenue. So yeah, we're down, and hopefully you guys watch this video. It's not the most structured, but I feel like you will get something valuable out of this, like a perspective change or just insight into a different perspective. Currently we are down, what, that's 5%, right? I'm kind of far from the screen. I think we're down 5% right now. We can look at VOO because we don't got SPY, but VOO tracks the S&P 500, the top 500 companies in the USA. It's down 0.5 percentage point. We look at our biggest position, which is ymax. It's down 2%. These funds, these high yield funds, are riskier and they drop more when the market is down. Especially on this day, we can clearly see this. So using the same ratio, even using a conservative ratio, if we're down 25% in a market crash, because in 2022 when the market went down, I don't think it was a crash, but the market just downtrended. In that situation, the S&P 500 was down about 25% at the lowest point from the highest point. And using those numbers, we should be over minus 50% on ymax if it was in 2022. Just keep that in mind, guys. I want you guys to understand everyone needs their own strategy, their own plan, risk management, and whatnot. I understand that I put my life savings into this. I understand the risk. I might lose everything, who knows? I understand that can happen. I'm using a lot of margin, also very dangerous. I don't recommend this for anyone. This is the risk I'm willing to take. Some people, like I believe the entrepreneur investor, I believe if he makes $2,000 in distributions next month, he'll use $2,000 of margin. That's a strategy some people use. Me, I'm using a lot of it. Some people use 100% of their margin total. Some people don't use margin at all. So just make sure you strategize and make sure everything you buy that's high yield and pays a high distribution has a purpose, guys. Money, for example, I have this here just to see what happens during a reverse split. I'm hoping it gets delisted, to be fair, because then it'll be out of ymax, because it seems like Jay isn't going to change the perspectives and remove money from it. Even though he says it's a falling knife and he hates and he doesn't want to buy any more money, yet we're going to do nothing about it. But that's beside the point. Everything needs to have a purpose, and everyone needs their own strategy. Some people will buy high yield like yieldmax and they'll invest into XDTE, and then they'll invest those distributions into lower yielders like SPY, for example. SPY pays a 12% yield. But look, we said VOO down 0.5%, ymax down 2%, but SPY is up 10%, not 10%, but 0.10%. These pay a 12% yield, but also they track indexes. They're way more safer and diversified. So this is why we got these in the portfolio. Some people do the opposite. They'll buy SPY first, and then they'll use those distributions to buy into ymax and yieldmax, the higher, riskier funds. We didn't do that. We did the opposite. We did high yield, and eventually we're transitioning into safer yielders. AIPI, XDTE. You got some curve funds like NFLP. You got your SPY, your QQQI, and in the future also we're gonna be buying JEPQ and JEPE. Look, these funds are actually green today, right? Just make sure you guys have a purpose. A lot of people in this community, they're total return investors, which is very dangerous. And to add on to that, hopefully you guys join my Discord. This is a investor community. You'll find me here and a lot of people here that are new to the community like him. And we are a level-headed community, right? We see things from all the perspectives. And it's very key to be in a community with level-headed people, because if you're in a community in yieldmax that focuses on total return only, well, they will look at Ulti, right? And Ulti, let's pull Ulti up, for example, down 61% in 1 year. The argument is, well, it's an 80% yielder, for example, right? It's an 80% yielder, so you're profiting 20%. All right, that's, I guess, true. But again, I don't think most people want something going down 61% in 1 year. A lot of people have these super high yielders, like 80%. There's extreme NAV erosion. Then they'll say on video or post that they're making $20,000 a month. The problem with that is that you'll be able to make $20,000 a month for 1 year. You know why? Because by next year, your NAV is going to erode by another 60%. And then your distribution will also erode following the price of the stock. So when someone says they're making $20,000, right? You click on the video, oh, that's so good. Oh, it's so amazing. But pay attention to what is in their portfolio. If they get 100% ulti and they're saying they're making $20,000 a year, the problem is $20,000 a month. The problem is they're going to need to reinvest over 50% of that distribution back into ulti. So if you make $20,000 a month, you're going to be reinvesting $10,000 a month just to be capital flat. So this completely changes what you thought was reality, and you thought they were making $20,000 a month, but the reality is they're making only $10,000 a month. And most of these videos and people don't factor in taxes, nor do they factor in the margin expenses. So if you're in a higher tax bracket and you're making $10,000 a month, 30% goes to the taxes, and now you only made about $7,000 a month. So this is way far from the $20,000 a month you thought they were making. But yeah, that's just something to keep in mind. Be wary with who you watch. Be wary with what you're buying. On days like this where the market is going down, you know, you don't want to be all in Misty, all in risky funds, single funds. You want to be indexed, but also you want to have, safer yielders that are probably going to drop way less than the higher yielders. SPY is actually green. QQQI is down 0.64, which, I mean, that's pretty close to the 0.4 of VOO. It's way better than NVIDIA, minus 2%, ymax 2%, Tesla 2%. There should be a balance to your portfolio. You shouldn't be all in one company. You shouldn't be all in one fund. And again, some people are going to hate me for this, but I'm just trying to look out for you guys, because a lot of people are going to get hurt if the market keeps going down, especially if you're using margin. You need to be diversified, and you can't just be in high yield. Don't follow me in my portfolio and try to replicate me. You can see, it's insignificant the amount of shares I have of SPY and QQQI compared to my yield max. But this is the plan, to invest into the safer things so we can balance out the risk with the stability in the portfolio. Hopefully you were able to get something out of this video that's beneficial to you, like maybe a perspective change, or just being able to see into my perspective. And again, only thing I ask is possibly like, share the video, but mainly I want you guys to come over to our Discord, expand our community. I feel like each of us brings something to the table. Hopefully you guys join and you bring something else to the table also, so we can grow the community and grow our portfolios together. Have a nice day.